Hello everybody, Tortoise Investing here, coming at you today with how much of insert stock would it take for you to get $1,000 a month in dividends. So we're going to break some of these down, we're going to look at the math behind it, and I'm going to show you how to come up with these calculations yourselves. Kind of like a quick little formula. It doesn't have to just be 1,000, it can be 100, it can be 10,000. Whatever amount that you want to put in. This is just kind of a quick way to figure that out for yourself. Now, before we dive into that, if you're new, please hit that subscribe button, drop a like down below, and comment anything. It can just be hello, hi, how's it going? That makes the YouTube algorithm happy, it gets my videos out there, and I greatly appreciate it. So, without further ado, let's go. None of this financial advice, always your own research for investing. So, first thing, here is a quick look at my portfolio. I did have to start over, paid off some stuff, but you can join me and watch me build this from the ground up, pretty much. But this is what we're rocking currently. Yeah, jumped into Celsius. Celsius is already down 7%. I'm not panicking. I'm not selling. I get paid next Friday. Not tomorrow, next Friday, next week. And if it's still down, I'll buy more. MasterCard's still down, I'll buy more. I would love if this would drop more so I can buy more. It's kind of my mentality now. I'm trying to focus on legitimately being a long-term buy and hold investor instead of moving in and out and up and down and all around and changing my mind every 5 minutes. But that's not what the video is about. The video is about this. So we're going to take a look first at Apple. What's it going to take to get $1,000 a month from Apple? So what we're going to do, we're going to go over here and open up our calculator. And our spreadsheet says amount desired. So amount desired. Apple pays every 3 months, so we're going to need to do 3,000 to get the total for 1,000 a month, and then dividend by divide by current dividend. So they pay 25 cents. So we're going to divide it by 0.25. Total shares needed. So we would need 12,000 shares of Apple to get $3,000 every time they pay a dividend, which is $1,000 a month. So we're going to times this current share price, and that comes up with, to get $3,000 every time they pay a dividend, which is equivalent to $1,000 a month, 2.5 million. Now you might be saying, like, Jesus, that's nuts. Yeah, it is, but your overall portfolio yield is more than likely not going to be just 0.52. Now, the way that we can backtrack this, so we got 2.5 million. We're going to divide that by the current. Shoot. Right. I could save this. 2.556. Divide that by current share price to get the share amount total, which I remember a while ago was 12,000. And we're looking for 3,000. Right at 3,000. So yeah, you would need a lot of Apple to get 1,000 a month, which would be 3,000 every time they pay out dividends because they pay quarterly. Well, let's move up in yield a little bit. Let's go to something just a little bit higher. We got Starbucks here. Oh, Mr. Starbucks. I like Starbucks. I'd love to see this one drop a little bit more. So we scroll down here. This is also one that pays every 3 months. So we're looking for 3,000. So again, the amount that we're looking for, 3,000. Divide by current dividend. They pay 57 cents. Divide by 57. And it's going to give me my total shares needed. So I would need 5,263 shares to get 3,000 every 3 months, which would be 1,000 a month equivalent because it pays quarterly. So we're going to multiply that by the share price for the grand total that we would need to invest. So you would need $417,789 in Starbucks to get your $3,000 every time they pay a dividend, which would be equivalent to $1,000 a month. Because again, they pay quarterly; they pay every 3 months. So let's look at something that pays a little bit more. All right, we got Realty Income. We got a monthly payer here. This is a very popular one amongst the peoples. I know a lot of people have this in their portfolio. I mean, it is the monthly paying dividend company. So we're going to take a look here. Amount desired. We're looking for 1,000 a month. I'm just clicking all over the place. It's early. 1,000 a month. We're going to divide by the current dividend, which just says 0.26, but it's like 0.2665, blah, 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 blah. But we're going to do 0.26. That's going to be the total shares needed for 1,000 a month. So we need 3,000 shares, 3,800 shares of Realty Income. So in order to get 1,000 a month from Realty Income, $202,653 in Realty Income. You might, numbers coming down drastically from a while ago. We went from millions to like 500,000 to 202,000. It's like, okay, that's starting to come down quite a bit just for 1,000 a month. And again, you can put in whatever you want for the total, as long as you follow this. Your amount desired divided by the stock's current dividend will give you your total shares needed. That number will be your total shares that you will need. Multiply that by the share price to get the grand total in cash that you would need to spend to buy that amount of shares. Now let's take a look at something that pays a little bit more. Arbor Realty. Arbor Realty pays quarterly, I believe, as well. So we're going to take a look at this one. 12.8% dividend. A monster. So 12,000 for 12,000 a year, we're in 3,000 a quarter because it pays quarterly. We're going to divide that by the dividend to give me my total shares needed. Multiply that by the share price, $13.68. 95,441. Oh, getting in some business here. We're below 100K. Things are looking pretty good. 12.8% dividend yield. I like Arbor Realty, to be honest. This is one of them I like. I was trying to come up with names that are pretty popular amongst investors, and I feel like this one comes up a lot. That's the reason I chose it. Now, the way that I myself would personally, if I was like, alright, we're going full income. Of course, you're going to have your growth stock still. You're going to have some percentage of that. You're going to have like a mixture here and there. But primarily, I'm going to be looking at stuff like this. Not JEPI, not high yield max, none of that. This specifically in QQQI. Reason being, they are more tax efficient than JEPI and all those other ones. You can look into that if you want to figure out more about the tax benefits and stuff of having SPYI compared to JEPI, and I think that SPYI is just safer overall. So, again, desired month. It's a monthly payer. 1,000 a month. Their last dividend was 50 cents. Divide by that. You need 2,000 total shares. things starting to look pretty good. So I invest $100,660 in this. I can get my grand total that I would need for 1,000 a month. Back test that. I'm going to divide it by 50/33. 2,000 total shares. Times 0.5, 1,000 a month. Look at that. We worked that thing all the way down from 2 million, half a million, was it 300,000, 400,000, a little over 200,000 to $100,000. Now, this isn't just me advocating for, cover call options are the way to go, but like when it comes down to it in the future, many years from now, if I'm hanging in this thing, you will see me eventually move some of my monies over to SPYI and QQQI unless something comes along that does what they do a little bit better. But yeah, that is a quick little thing that you can do. You can play around with this with some other stocks just to kind of, get the whole noodle working and figure out just how much of what, how much you need to get 500 a month, 200 a month, 100 a month. Anything that you want to put in would work for that. Again, if it pays quarterly, you'll want to multiply that by 3 because you're going to need 3 times that amount to get your monthly total. But yeah, just a quick little something for you. Hope you enjoyed that. Make sure to hit that like and subscribe button for more. And until next time, I hope everyone takes care. See you.